Welcome back. Well, the Nifty status quo, in fact, has been fairly range-bound once we started off the trading session, but it's the broader market which is a lot more active. But let's take stock of what the market view is, and we have Mr. Devender Singhal, the Executive Vice President and Fund Manager at Kotak AMC, joining us on the show. Devender, hi, good to be speaking with you. Well, I think the market has been toppish for a while, and that's what a lot of people have been saying, but then the broader markets continue to outperform. What's the view on the market right now? Do you think 25,000, 25,500 is the top for the year, or there could be more steam at the index level?
So hi, thanks for me having on the show. See, markets definitely see like a new high. We are almost there, But if you look at it, that the earnings expectations is also very high, right? And as long as the earnings growth holds true, I think we can see better days ahead. And so far, the outlook with crude dropping, monsoon being high, uh, above normal, I think there are all positives which are around, which is keeping the market buoyant.
So when it comes to buoyancy, PSU is one index where it has been actually outperforming the Nifty or the benchmark for nearly 4 years now. And I see you also manage the PSC BSU index fund. So given the fact that we have seen such kind of a run up in the index, are you seeing some pressure when it comes to redemption? Are you still bullish when it comes to PSU pack?
See, we never look at a particular sector as such, when we look at the bottom of stock picking or we look at particular industry therein. Now, while what we're talking about is an index fund, so it is basically constitutes of all government companies, and we have little, a role in paying selection there. But overall, when we look at the PSU pack, as long as the earnings growth holds true and the valuations are on a reasonable side, I think you may still expect some moves. But definitely there are pockets whereby, the valuations are far ahead of the fundamentals to various reasons, whether there's a frenzy or a low float or something like that. I think that is one pocket one needs to be careful of. But on a whole, if you find the fundamentals good, then PSU or non-PSU, I think we are good.
Devendra, I want to kind of discuss your multi-cap fund a bit more. I see financial services still continue to be the biggest weight at 18%. Maruti has a high holding. Hero 2, Oracle Financial Services is also high up in the list. What are the kind of stocks that you would look at in the multi-cap fund? What's the criteria that you usually use?
So, Anisha, what we are doing right now is that we are focusing more on the bottom-up strategy rather than the top-down strategy. So wherever we see earning surprises, wherever we see non-linearity, either in terms of earnings growth or possible multiple expansion, that is where we are basically moving towards. But one thing is very, very clear in India, and we have learned the lessons very well, that till the time you see growth being there in a company, the re-rating doesn't happen. Now, as long as the growth is there and it's there to beat the market expectations, I think we are in a good state. That is what we are looking for in most of the industry companies, whereby our understanding of the growth rate is slightly better than what we think the overall market is expecting them to be. So as long as we're able to find those names whereby the growth could be higher than what the market is expecting, I think that's the way we are building on the portfolio. More bottoms up. But if you need to talk about sectors, I think we are positive on the bottom end of the consumption pyramid coming back. We're positive on the power sector as such, and we're positive on the Make in India drive as there.
Mr. Singhal, right before the holiday period is starting, you have also launched the Kotak Nifty India Tourism Index Fund. But given the sharp run-up that we have seen, be it for airline stocks or hotel stocks, aren't you worried about the valuations of these companies? And do you still think that this is the right time to start such a fund and start such an index? What is the kind of outlook that you're seeing here?
See, whenever we advise our clients to put money into equity, we always tell them to look at a longer horizon. In equity, in fact, most of the people now being advised that, you look at more than 5 years, 3 to 5 years at least, when you're looking at, equity and investments therein. Tourism as a sector has a lot of promise. We are seeing, more and more people taking a couple of more trips than what they were doing earlier. Adventure tourism, pilgrimage tourism, business travel, they're all now basically contributing big numbers to the overall GDP. And I think this is a good way to participate in the entire growth in a diversified basket, which is focused on tourism as such. So yes, over a 3 to 5 year period, definitely it makes a lot of sense. And I can tell you on the tourism side, we're just scratching the surface in terms of how domestic money would be coming in and so overseas money.
Interesting. But Devendra, if I had to ask you to pick between the rural end of the market, which you talked about, that the bottom end is probably looking ripe for a reversal, versus the urban discretion, what would you pick more in terms of the risk reward right now?
Without blinking an eye, the bottom end of the consumption sector is what looks more interesting to us currently than the urban side. This is one segment which has been reeling under a lot of pressure. I think after a long time, we have seen PAPCE moving up last week. We have also seen the savings index moving up, household savings as a percentage moving up after a long time. I think this is just the right time for the rural end of the market or the bottom end of the consumption, be it rural or urban, to basically start contributing to the growth. So the K-shaped recovery which we've seen post-COVID, I think the other part is now coming back to the picture.
Okay, Devendra, on that note, we